Hi everyone, thank you for tuning in today. What we're going to be doing in the next 10 minutes is we will be having a look at German economic sentiment. Now, first and foremost, when discussing, we should also mention what occurred last time. And the major index of economic sentiment expectations for Germany fell for the fourth straight month in April to 63.2, following 46.6 in March amid fears of escalation in the Ukrainian conflict, while current conditions surged again to its highest level since July 2011, reaching 59.5 compared to 51.3 in March. Now, according to James Percenter, who is an editor and analyst at capitalspectator.com, he says that Germany and France presented a united front to send a warning to Russia this past weekend, but a determined stance in reaction to the crisis over the Ukraine may come with a hefty economic price tag for Europe. For example, a recent report issued by the European Commission estimates that imposing harsh sanctions on Russia could reduce growth in Germany to the point that Europe's leading economy flirts with a new recession. And a key question in today's report is the sentiment still deteriorating when considering the near-term future? If so, is the soaring mood taking a toll on the current assessment of economic conditions? Analysts expect another mixed review. The consensus forecast sees a slide in expectations, but that's projected to be offset by another rise in the measurement of current conditions. Let's have a look at also what are the exact anticipated forecasts. Now, Bloomberg, as you can see right here, Bloomberg conducted a poll amongst 33 economists, and right here on the Y bar you can see 10 of those firms and economists that represent the respective banks and companies. Overall, the median estimate is 40, high estimate being 47.0, while the low 37.1. So you can see that the opinions do vary quite a lot. According to Credit Agricole, ahead of Q1 GDP figures to be released on Thursday, markets should find some distraction in the German ZEW today. The ZEW index is likely to follow the same pattern as in previous months, in our opinion, including a moderation in the expectations components, but firming current conditions, which would also be consistent with slower GDP growth in Q2 relative to Q1. And finally, before we move forward and I give the word to Alex, who will cover some of the technical aspects of the upcoming data release, let's have a look at what Dukascopy community members and fellow traders have to say about the potential impact on the upcoming data release on Euro USD. And you can see right here that 54% of the voters believe that the impact will be bullish, while 46% believe the impact will be bearish. So overall, they're still quite neutrally divided among all of those who took part in the fundamentals contest. Let's also consider what are, well, at least their comments and their views that support their bullish or bearish opinion. Well, for example, Sanket says that Mr. Draghi raised his concerns as the struggle of economy still persists. Also, latest inflation made it highly disappointed analysts. So there is no doubt to see a poor figure than previous, which is well predicted by market players. I feel technical grounds will play the role. So he believes that the impacts will be bearish, as you can see. And when we have a look at the bullish side, we have Voltrod saying the indicator above 40 to historical measure is high enough. Also, insignificant decrease can shift pair Euro USD more low upwards. So these are some of the comments and ideas that were provided by Dukascopy community members and traders. So those are the fundamentals that we were planning to discuss with you. And finally, I give the word to Alex to have a look at the technical aspects.
Thank you. Hello everyone. So today we are discussing news from Germany, Europe's powerhouse. Actually, despite the fact that Germany has been the key driver for the whole Eurozone economy during the last several years. Over the last several months, we have received an abundance of disappointing fundamentals, including weak exports, industrial production, as well as constantly disappointing consumers and investors' confidence. And also keeping in mind growing Ukraine tensions, there's a rather high possibility that today's report will surprise markets to the downside, and we'll see some figure below 40 mark. Therefore, the negative surprise trading strategy will be based on the most traded currency pair, Euro-USD, obviously. So first of all, I would like to point out that last week, I guess you'll notice that the pair has performed a really impressive downside rally, which equals to 249 pips. And actually that was provoked by the ECB press conference where Mario Draghi signaled his readiness to act during the June's meeting, and therefore the single currency has received a strong and long-term bearish bias. However, we see that currently the pair is trading in a very narrow range, bounded from the upside by the daily resistance around 137.70, while from the downside the pair is supported by a recent low and daily support around 137.45. Regarding the trading strategy itself, we see that the average market reaction is around 14 pips during the last 5 months, and therefore the recommended take profit is placed just 11 pips, so that's actually a crucial level for the short traders, and we see that just recently the pair has constantly struggling to move below this level, and to be more precise, it's 137.53, just once again 11 pips till the level is reached. And currently you see that the pair struggles to move below 200 minutes simple moving average at 137.63. From the upside, the recommended stop loss is placed around the recent high at 137.71, and pips that will be just 7 pips, so not a very risky trading strategy. However, also I'd like to point out that crucial level for the short traders once again is placed at 137.45, and I guess in case we'll see some really disappointing figures, then the pair will have a potential to drop even to this level, and then it will be 18 pips, still actually in line with average market volatility. Regarding the market sentiment, actually there is a rather positive change, and we see that currently it's 59% bearish, and that's actually significant improvement compared to the last several months when traders were selling the pair in more than 60% of all cases. Meanwhile, attitudes towards the single currency has changed as well, and now Dukascopy traders are selling the shared currency only in 56% of all cases, and at the same time they are still buying the greenback in 65% of all time across the board. And regarding the pending orders, here we also see that traders believe that the pair will appreciate in the medium and long term, as 66 and 60% of pending orders in the 50 and 100 pips range respectively are placed to buy the pair. And regarding the market sentiment provided by other market participants, here we see that it's still bearish. However, there are also some positive changes in the sentiment. Now, as always, let's move to the technicals, and actually there's a rather mixed situation, as only indicators on the 4-hour charts are sending sell signal, while indicators on the 30-minute and monthly chart are pointing at the opposite direction. And meanwhile, indicators on the hourly, daily, and weekly chart are neutral. So, data is already out, and the pair has just penetrated the recommended take profit, actually. So we see that German ZEW economic sentiment came significantly below analysts' expectations at 33.1, so that's actually a very worrying sign for the German economy. Yep. And the initial market reaction was 13 pips, so practically as it was expected. Yep. And as already mentioned, the recommended take profit at 137.53 has been penetrated. So luckily the trading strategy worked very well. And once again, the next key level is 137.46, and that will be just 8 pips, less than 9 pips from the current market price. And keeping in mind there is a lack of fundamentals from Eurozone until Thursday, yep, I guess the pair will be mostly driven by news from the United States. However, until the release of the US retail sales later today, the pair is likely to remain under pressure, and the retest of the daily support at 137.46 once again looks really probable. And actually, the pair is already trying to reach this level. So once again, the pair has received another strong bearish bias from the fundamentals from Germany, and therefore the outlook for the pair is bearish. Well, I guess that will be pretty much from my side. Hope that was useful for all of you. And now I'm giving the floor back to you, Gita.
Great, thank you very much. Thank you very much, Alex, for the technical side. Disappointing figures for Germany, unfortunately, but we have to have a look at the upcoming other data releases, and be sure to tune in tomorrow. What we will be doing, the economic data release, is we will be having a look at UK unemployment rate, which will start at 8:20 GMT. So be sure to tune in and have a look at the labor situation in the UK and United Kingdom. Thank you for tuning in. That is all for today, and be sure to stay tuned for other upcoming webinars. Have a nice day, and bye-bye.